You've worked really hard for the money inside of your traditional IRA, so what happens if you leave any of it behind to your beneficiaries? I want to take some time today and dive in to what happens if you are leaving behind a traditional IRA, because this might sound crazy. We all are thinking, I want to leave a legacy, I want to leave money behind. However, there are actually assets that are better to leave behind than others. And today, specifically, I want to focus on talking about the traditional IRA. And this is a good thing whether you are set to inherit one or you plan to leave one behind for your loved ones. More specifically, today, I want us to dive into if you are leaving it behind to a non-spouse. Just to cover it briefly, you can leave an unlimited amount of money to your spouse, and you are avoiding and not going to have to go through the process of paying inheritance taxes on that. Where we start to see more planning needs happen and some different taxes come into play is when you are leaving money behind to a non-spouse. So today I want to dive into what happens if you are leaving behind a traditional IRA to a non-spouse. I know this sounds very specific because it is, and it is something that a lot of people are not talking enough about. And so I want to make sure it's a conversation that we are having today. So there are some new rules that you may not have been paying attention to that I want to make sure you fully understand when you are leaving behind a traditional IRA. Keep in mind, I keep saying traditional, right? Roth money, it's a little bit different in terms of taxation and the way the money is pulled out because you've already paid money and taxes on that asset, right? So this is a little bit different. Your traditional IRA, no taxes have been paid, and we all know that the government wants to get their cut of that tax money. And so, to review the changes that happened, if you pass away after 2020, as we are now in 2025, if you pass away after 2020, there is now what is called the 10-year rule. So there's two different ways that this works. Let's say you are leaving behind money or you inherit money where the person who owned that traditional IRA was not taking RMDs yet. If they have not taken any RMDs, you have until the 10th anniversary of their death to take all of that money out. Now, they've changed this rule because this way you are allowed to then sit there and say, okay, I'm going to take more in some years than in others, hoping that you can then use this as a tax strategy in order to figure out when you want to be taking this money. Some people prefer to take more in some years than others, or they just want to wait for a lump sum and take it at the end. There are all different ways that you can do this. Now, the other option or situation you could be in is, let's say the traditional IRA you are leaving behind or inheriting, you've already had to start taking RMDs, required minimum distributions, on that money. Now, the entire account still needs to be drained by that 10th anniversary and all of the money taken out of it, because once again, the government wants to get their taxes on it. However, you need to continue taking RMDs every single year, and the RMDs are going to be based off of the life of the person who passed away. And so the reason that some of these, strategies can be really burdensome, whether you are taking the money, spaced over and they haven't taken RMDs yet, or let's say the person already has, you are now adding on to your tax bill in a way that you may not have been prepared to. So when you are leaving a traditional IRA behind to somebody, there's a limit on what type of planning they can do tax-wise. Yes, they can hopefully space it out in terms of years, but they need to then sit there and say, okay, I have 10 years to take out this money. And what I commonly see is we've seen the way generations are falling these days. A lot of times it will happen for people in their highest earning years that they are inheriting this IRA. And so that's really adding to their tax bracket here. Or it's also happening in years where they're paying for children for college. So that could mess things up in terms of financial aid or need-based scholarship that they are getting or any other things that they are trying to qualify for. So you have no idea how this asset is actually going to impact the next generation. And so I say all of this to make sure that you are thinking strategically, how are you paying the taxes on this asset during your lifetime? Things to consider are, does it make sense to do a Roth conversion? Does it make sense to do some charitable giving and give away a portion of this asset if you are already doing charitable giving in your life? Maybe it makes sense to give away money from this asset rather than cash or other things and assets and financial pieces of your life. They're all different strategies that we can use if we start looking at this ahead of time, right? And if we can sit here and start planning now for your lifetime how we want to strategically spend the money and leave the money behind to the next generation, because there are great ways that you can plan for this. And now the questions to be asking your financial advisor are, number one, be transparent about everything that you have so they can get the full picture of what your potential tax bill is, both during your lifetime and what could be left for the next generation. And make sure too that you share with them, hey, this is something that I am concerned about, and ask them what are some different strategies that you could be using during your lifetime in order to help the next generation and the next side of things keep as much money in their pockets, but also make sure that they have a strategy to be able to inherit the money in the best way possible. This was a very brief episode, but an important topic that I want to make sure we are covering. We are going to be covering a lot more things like this between different tax strategies, inheritance, whether you are the person, like I said, who is inheriting the money or you are leaving it behind. There are so many different strategies that we can use if we have the time to do so and plan with it. So make sure that you are working with your financial advisor, your financial team. And if you want to have a larger conversation on this, feel free. The call, you can apply for an intro call down in the comments below, and we can talk further about this to talk about how do we strategize and look at your full financial picture to figure out what makes the most sense for you and your family, and also in the way you want to leave things behind strategically. I will see you next week on the Wealth Cafe, and we have more great episodes coming up, and I can't wait to see you then.